are we positioning ahead of the Fed, Steph?
How are we positioning? It's really challenging at this point, right? Yeah. Because usually the Fed does not like to have uncertainty going into a meeting and a decision. And we have it in spades because we just don't know what's going to happen with the banks. We're going to talk a little bit about my moves in a little bit. So we can go there if you want. But I think at least for tomorrow, I think you rule out 50, right? And probably not a pause. I think that would be too dramatic of a change for the Fed. And I think they go 25. And I think they're not done because the economy is actually gaining momentum. The GDP is now running at about 3.5%. And core retail sales were better. Housing data is getting better today. Great number, right? Much improved, a 14% existing home number. Initial claims remains really strong. So to me, that's good. It's great that the economy is not falling apart. But at the same time, inflation is still quite high at 5.5% headline. So I think they will go 25 tomorrow. And I think we have more to come. Not a lot more, but more to come. And then we have to kind of just reassess and see where there are opportunities. And like I said, I saw a lot of opportunities in the past week.
It would have been a lot easier had the data slowed down a bit. It would have given the Fed a little bit more cover. We know that lending standards are in fact tightening. They are going to continue to tighten, Jim. So what do you think the Fed's playbook will be? And, so here's 25 with a pause. No hike with the hawkish tilt. I mean, there are all sorts of scenarios that we
This
can
is
be
one of those
about.
cases, Mel, where, what I think they're going to do is drastically different from what I think they should do. I think they're going to raise 25 basis points, and I think they'll, the arguments will be, at least behind the scenes, that the markets are giving them cover. Look at what's happening today to do so. And there will be this discussion of if they don't raise 25 basis points, that they'll somehow lose credibility. I think those are false arguments. I think that they really should not raise 25 basis points for a number of reasons. They should pause right now. And reason number one, inflation is coming down. I can hear Steve's engine whirring up right now. Yeah, but it's not coming down fast enough. Maybe that's true, but after the events of last week, it's definitely going to be coming down faster than the reported results from the CPI, PPI of February. The other thing is, look, the banking system is in peril right now. This is just not the time to raise rates. You run the risk of breaking something more than it's already broken. And if they raise those 25 basis points, I think there's a reasonable chance that within 2 to 3 months they'll be taking that 25 basis points back off, which makes me ask the question, why bother? I mean, it's so counterproductive that I really wish they wouldn't, but I think the markets are going to give them cover, and they will.
I think they pause. And
good.
I know.
Like you think that they should pause and that they actually will pause.
I think in both cases that's true. Yes, I think they should pause, and I think they will, and I think that's how you reclaim your credibility.
Then it'll be off to the races now.
Good.
I hope not, because we have big problems, and that's the reason why they should pause. So a rally to 4,100 in the S&P 500, I suppose, is possible. Anything beyond that, I'm really going to scratch my head and say, why? Because we are now looking at a situation where you've got, for the first time in 15 years, genuine concern all over the world about some very important financial institutions. We're having pretty much a rescue every 3 days at this pace. I made a very bad call in January. I said one thing we know for sure. Interest rate volatility is probably going to die down versus 2022. Wow. I could not have been more wrong. What we're seeing in the 2-year, and this is from Bespoke, I thought it was interesting, we're on a 6-day streak of 30-plus basis point intraday moves in the 2-year Treasury. That's longer than the 5-day streak we had in the immediate aftermath of the Lehman bankruptcy. This is not how the 2-year should trade. And so I think the Fed's going to look at that. And yes, the market's up today. They have cover, blah, blah, blah. 87% there's an 87% probability of a hike priced into the market right now. Okay, that probably tells them we could do it if we want. But if you're really concerned about stability, which is your mandate, and you really want your credibility, you cannot simultaneously be rescuing the 15th largest bank and raising interest rates. The two things do not make sense to be taking place inside of the same 7 days.
Do you think the terminal rate going from 6% last week to 4% this week is is reflecting kind of what you're saying, that the Fed should pause and
I'm so
stop?
glad you asked. Stephanie, if you look at 1998, we had a disruptive exogenous event in the markets. Long-term capital management blew up, multiple currency crises in Russia and Asia, and the decision was made, not that we're done hiking for the cycle, but let's pull our foot off the brake for a second and just reassess. And they actually did 3 rate cuts, believe it or not, that summer into fall. By 99, they were hiking again. We were back, the terminal rate. So in 87, they took a breather. They were in the midst of a hiking cycle. That's part of what caused the crash of 87. They stopped, looked around, cut rates, and then they were back to hiking. So it would be ahistorical to say that the Fed will throw its credibility out the window by reacting to what is clearly a financial crisis brewing.